But I could tell you where inflation, the pace of inflation, the inflation cycle is headed over the next several months, and it's not up. It's not running away. Inflation is cyclical. It's different than growth. It's different than jobs. And I think that confuses people because they tend to equate these three things. Inflation has its own unique cycle. It's trending down. And just to clarify, right, we on this desk, we'll talk about inflation, disinflation, inflation, what's the interest rates, this and that. That has nothing to do with the price of your coffee or your eggs or your car, which might have gone up a lot and fell a little. And so you still feel it. And that's the big disconnect that I think people try to reconcile. It's hard to do.
We were just talking about the cost of housing here in New York City, and we recognize that we're absolutely not representative of the rest of the world here on this little island of Manhattan. But what's going on with shelter inflation for real people out there?
It is, the pace of increase is declining, okay? So that is technically true. And that is very important for interest rates and the future course of interest rates off of which everything gets priced. So this is all very important, but it doesn't mean that the rise that happened over several years went away. And so there's a little bit of a trick in there to be aware of, right? If the pace of inflation comes down, real wage growth goes up. That's just math. But it doesn't feel like it, right? Again, because if the prices went up a lot and they fell a little, you still don't have that much money in your pocket.
What did you take from the labor data we got earlier this week?
And look, I've said this before. We saw it coming. there was a deceleration in jobs growth that we were talking about 6 months ago. That continues to happen. But the important thing to understand is there's no collapse in jobs growth, which is a fear, right? You want to look at what are the big risks. Are they very real and material or not? And there is no big collapse in jobs growth here. We can have a we can have a 2026 version of a somewhat jobless recovery. We've seen them before in the early 90s.
I mean, folks, Economic Cycle Research Institute is a heritage back pushing 100 years. I'm going to be collegiate. 80 years? Am I close?
Who's going to quibble?
Who's going to counting? We just had a 5-4 descent at the Bank of England. We just had dissent here. There's always been a debate. Color within your cycle research now the distinction of our dissent going into 2026.
Look, I think very simply, and this is one man's opinion, I think people are confusing cycles. There's cycles in growth. They're different than cycles in inflation.
Nancy Lazar strongly agrees with you.
Okay, people don't understand this at a very fundamental basis. All of the PhDs, and God bless them, I mean, they're doing hard work, but there is a model somewhere that equates a certain amount of growth with a certain amount of inflation, and that's not actually the reality we see. What we see are cycles in growth and lagged, related, but different cycles in inflation, so they can de-link at times, and you can have inflation-free growth like we saw in the late 90s. You could have job-free growth like we saw in the early 90s.
So are you saying cycle growth now that delivers accountable, ample real GDP and, dare I say, a buoyant nominal GDP?
Yeah. There's jobs growth.
He's not schooled for radio.
I'm sorry. I'm not going to drag it out.
He didn't take Surveillance 101. Yeah, is not the right answer, right, Paul? Save us, Paul.
This is cyclical. This is for a couple of quarters, and then I reserve the right wholeheartedly to change my mind.
So how about this U.S. consumer here? What's the feel out there? We know we've been talking about the K-shaped consumer and the K-shaped economy for a long, long time here. How do you think about the consumer?
Well, look, there's two things. The K-shape is extremely real. And when you say a long time, you could actually say centuries or longer. And it goes in ebbs and flows. But the K-shape remains real. So you had this spot you were talking about earlier, Lisa, about people spending an ungodly amount of money to renovate a rental, right? That's the K-shape, right in action, right in front of you. At the same time, the lower leg, which is most Americans who are working, who don't have a lot of assets that are inflating, they are not going to be fired en masse, and therefore you don't have a recession.